Thanks so much for joining me. Before we get started, please take a second to click subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now.
It is an energy company. And so we were having a discussion earlier about kind of the hurdles to investing, where if I can sit in my money market and get a 4.2% annualized yield, you know, if I'm looking at something that pays a dividend and the bulk of its returns are in dividends, that yield either has to be considerably higher than 4% or it has to grow at an insane rate to justify being below that. Well, the one that I added money to is on the yield side considerably higher than 4%. The ticker or the company and the ticker is MPLX. They are a master limited partnership that is the subsidiary of Marathon Petroleum, the oil refining company. So MPLX is the combination of a couple. It's been a roll up of master limited partnerships in recent years, where they basically some combination of oil pipelines, natural gas gathering pipelines. The bulk of their business is supplying and distributing crude oil to and refined products from Marathon Petroleum owned facilities. And as a result, it's kind of one customer centric, which doesn't sound great, but it has worked so far, and the contracts are done in a way that isn't like, one hand is feeding the other in that sort of way. What attracts me to them is that they have over the years proven themselves to be one of the better capital allocators in this business, one of the more disciplined investors in this business. They have a considerably lower leverage than a lot of what we typically think of when we think of oil pipeline companies. Their debt to EBITDA is in the low 3x range, which is quite nice for oil pipeline companies. And their cash coverage of their dividend is much higher than a lot of the other players in this industry. And as a result, they've actually had some spare cash to buy back stock, which, if the combination of the two has been a very lucrative thing. And looking at the yield right now, it has an 8.99% dividend yield. And so with that higher yield and what appears to be one of the better balance sheets, one of the better abilities to pay that dividend, I felt much more comfortable adding money to this one than a lot of other high yield opportunities right now.
Yeah, so another one that I added to, and it's fast becoming one of my like top five positions, is Mercado Libre. Tyler, do you own this one?
I do not.
You're like the only person I've talked to at the Motley Fool that does not own Mercado Libre.
I end up throwing it in the too hard pile every time, because every single time I look at the credit metrics for its
Oh
credit
yeah.
business, and it sends me running for the hills, and I just say, look, I don't understand this well enough, and that scares me. And
Well,
that's
there's
that that's
a lot of strange dynamics in that credit business. Since you mentioned that, I'll talk about that first. The loss ratio, the non-performing loan ratio is something like 40% in that part of the business, but the average interest rate is like 70%. I mean, they lend money in Argentina, where Argentina's inflation rate is something like 98% right now. So you have the high inflation rates in a lot of their markets, which is another dynamic. You're getting paid back with devalued dollars. That's another part that would put that part of the business in the too hard pile for me, is the high inflation there, that just the credit quality, and that's not my favorite part of the business, if being honest. But overall, like, the e-commerce platform is doing phenomenal. I love it when you get these big, deep-pocketed competitors going up against a company and they end up winning. It's one of my favorite things about Etsy, for example, is that Amazon tried to put them out of business and failed. Amazon tried to go up against Mercado Libre a while ago. There's still a big presence in Latin America, but Mercado Libre is the number one. C Limited was kind of the e-commerce company, where their Shopee platform, when and they actually just decided to pull the plug on Latin America recently, whereas everyone called them kind of the Mercado Libre killer. So I love it when that happens. Their merchandise volume was up 35% year over year, even with the 2022 headwinds. Payment volume on the Mercado Pago platform, which I love. I think of this as kind of like an earlier stage, like eBay PayPal relationship between the e-commerce and fintech. Payment volume was up 80% year over year. The number of active users on the platforms up by 18%. So it's not just inflation; more people are using their platforms. Gross margins were higher. The business was very profitable. Operating margin was about 12% in the fourth quarter. They're focusing more on third-party sales, which is a much more higher margin form of e-commerce than selling their own products or selling products themselves. Their logistics platform is gaining a lot of traction. And you're right, it is a very complex business. I feel like Amazon is a simpler business than Mercado Libre to understand, no question. Um, but trading for a multiple of 4 times sales now, as opposed to a double-digit sales multiple about a year or two ago, given their growth rates, I think it just makes a whole lot of sense. It's a profitable company, so it's not just like I'm not just valuing it by sales because it doesn't have any profits. It does. So I think this one still has a lot of room to run, and it seems like a great combination of a margin of safety and growth potential. And I know you have another energy or utility
Yeah,
stock to
so
talk
I,
about.
I feel like for you, Mercado Libre, of the three that we've mentioned here, I felt like Mercado Libre was like your swing for the fences.
Yeah,
And so this is my swing for the fences. Um, this is Noble Corp. It's an offshore uh, oil and gas rig company. The reason that I am interested in this one right now is because the rig market that was in the absolute pooper for a long, long time is strengthening and strengthening fast, in large part because there are just fewer rigs out there than there used to be. Following the downturn from like for 2014, 2015 to 2020, about half of the rigs that were in the global fleet were just scrapped, sent to the scrapyard, never to be used again. And so as a result, the amount of available equipment just out on the seas is a fraction of what it used to be. And as a result, that which is getting picked up is now all of a sudden starting to see significant day rate increases, which is kind of how they get paid. They get paid on a daily rate called day rates, right? Well, 2014, day rates were in the 475, 500, 525 range. We're ticking back up to those levels today. One of the most recent rig releases that I saw was Transocean turned down a contract for $475 a day, 1,000 per day, because they're like, we think we can do better in the next couple of weeks. So the market for rigs is extremely attractive right now. What is pushing me towards Noble Corp specifically is it came out of bankruptcy and has a squeaky clean balance sheet. There is no debt obligations. It doesn't have any future financing requirements because it doesn't have rigs in a shipyard being built. It's basically like right now, we've got a little bit of debt, we're going to pay that down, and all that cash is going to go back to either buybacks, dividends, or however it goes. And as a result, the free cash flow yields that they are projecting over the next few years are spectacular. We're talking, for rig companies, which are, decent return on investments, like, what, a free cash flow yield of 7 to 9% would be pretty good. We're talking like 22, 27%. And so with numbers like that over the next few years, I think there's going to be an immense 3 to 5 year window to really swing for the fences with oil service companies and specifically in the offshore area.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.